Let's talk about property taxes. Property taxes is the main revenue source for municipalities. And that revenue is used to pay for many required local services that are required by municipalities to perform for all of our communities. And that can be anything from public service, public safety services, education, even keeping our land records. So it's a number of different services that we provide, and our property taxes being the main revenue source goes towards those. And as a matter of fact, many municipalities, property taxes makes up 70 to 75% of our total revenue on an annual basis. That's a big portion of a municipality's revenue. You may hear property taxes are called regressive, and we call property taxes regressive because they are regressive. Property taxes are calculated based on the value of a property, value of a person's home, value of a car, value of a business. And that is blind to the economic circumstances that the home or the business may be in that given year. So it is strictly based on market value at the time. And that is very regressive. There are many stressors that and pressures that are put on property taxes, but I want to focus on two of them in this conversation. The first is unfunded mandates. What are unfunded mandates? An unfunded mandate is a mandate that comes through legislation that is passed that requires a municipality to begin to perform a service or a function that we didn't perform in the past that doesn't, and with that requirement to perform this service, there's no revenue generation tied to it. So there's no revenue for the municipality to offset the cost of this new service or function that we are now required to perform by state statute. That's an unfunded mandate. And when this happens, when legislation finalizes and we are learning of these new mandates that municipalities need to take on and perform, the cost of those services has to be paid for by somewhere. And that gets burdened onto the taxpayers. That gets burdened onto property taxes. It gets translated onto and puts added pressure onto the property taxes, and it increases property taxes. So that adds pressure to property taxes and can raise property taxes for services and programs that are required by the state level, but municipalities are not given a revenue source. We're not provided with revenue from the state to offset those costs. And thereby it has to get passed on in the property taxes because that's the only mechanism the municipality has to raise the revenue for those costs. The second main pressure that goes onto property taxes is mandated tax exemptions. So this is another piece that can be legislated, and these are usually incentives for businesses or even, the state has tax exempt property throughout the state, and other entities will have tax exempt property throughout the state. And these exemptions is exactly that. Those properties are exempted from property taxes. So they're removed from that revenue stream at the local level. Sometimes when these property tax exemptions come through, they are tied with a reimbursement that the municipality is supposed to get from the state to make whole the municipality for that lost revenue. Typically, that doesn't happen. Typically, the amount of revenue that is received for that reimbursement is substantially less than what the municipality would receive otherwise in property tax revenue if that property had just been taxed from the very beginning. So there's a loss on the municipal's revenue side for that lost property tax. And so what happens is the rest of the community picks up that cost, picks up the burden of that, and that gets shifted to the residents and gets shifted to the other businesses. There are some municipalities, and every municipality has tax exempt property in it that we do not have full reimbursement for. So every municipality across the state of Connecticut is impacted by this. Some are impacted substantially more than others. Some have 50% of their grand list, so 50% of the property that's located or more of the property that's located in their town is exempt from property taxes. That's a huge burden to shift to the remaining population within their community to be able to provide the revenue for all the other services that need to be provided for by that municipality to their community. So those are the two focus points of pressure that is put on property taxes that are really done at a legislative level, the unfunded mandates that get passed through, and mandated tax exemptions. Those are those two components that I just wanted to take an opportunity to talk through what those really are. And I encourage everyone that if you ever have questions about property taxes, or how they're calculated, or how these unfunded mandates or mandated tax exemptions may be impacting your local municipality, reach out to your administrators of your municipality, your town managers, or your first selectmen, or even reach out to CCM and ask the questions. And we can walk through what those individual local impacts are. It's important to understand what that impact is for those components, because they can have a huge impact, not just to the property tax, the mill rate, but it also impacts the affordability of our housing and the affordability of our businesses to stay in our community. Because when other businesses and residents are picking up the burden of these costs, it makes it more challenging and more costly for them to live and work and do business in our communities.